That's absolutely right. It doesn't matter whether we're talking about a marriage or we're talking about an employer-employee relationship. If trust is not there, the markets break down, as we're seeing now. I mean, companies, these big banks that were given all this money, they're hoarding it now because they don't trust the market, and they don't even trust their own models at this point in time.
Now, Fortune magazine has made some studies, and obviously they do the Fortune 500 and so forth, but let me read this, and I'm going to basically, you have to ponder on this startling slide a couple of seconds, because it says only 14% of Fortune 500 companies in 1959 were still on the list in 2009. Now, if you think about this, that means that today, of all the Fortune 500 companies out there, and we're talking big companies, essentially, if this holds true, that by 2060, only 14% of those companies are still going to be around. Mm-hmm. That is startling.
Well, it is startling if we're going to work for them and we want to retire, or
pensions.
A lot of weight is put on that Fortune 500 list, and it's quickly showing itself to be irrelevant. Bigger isn't necessarily better. The question is, how long can you be big, and can you sustain the performance required to stay on that list without having to do things that lack integrity?
Yeah. Well, I'll tell you, I want to skip ahead now, and I want to dive into the most exciting part to this show, and that is the Integrity Index ratings. What is that all about? Take us from start to finish and talk about what that is.
Okay. So when I left Enron, as I said, look to Enron to foretell the future. I believed that Enron, believe it or not, was not about rampant criminality. It was about unethical behavior within a handful of people that was allowed to go on. In my case, some days I was making $20,000 or $30,000 a day in stock options. I didn't even have to go to work.
Wow.
So, the incentive was there to turn a blind eye to what was really going on. And just a couple of weeks before he passed away, I met with Ken Lay, and he was surprised that I actually seemed to know more about things that were going on inside the company than he had, because he had been insulated from those things. So I began to look at whether or not we could predict whether a company was an Enron. In worst case scenario, they ultimately commit securities fraud. But what if they don't commit securities fraud but still fail because their strategic plans lack integrity, or their organizational structure lacks integrity? And when I say integrity, I talk about structural integrity, the ability to withstand market forces, like a building. We wouldn't allow a building to be built without an engineer certifying that it could withstand high winds. Yeah. So what the Integrity Index is it's based on game theory. And in 2011, we will issue the very first ever Integrity Index ratings for all public companies.
And how do you basically come about that rating? What goes into the soup to basically output a rating?
So we take only publicly available documents. We do not dumpster dive.
So you're not going to the back of the building and picking out who's doing what?
No. We're not doing espionage or anything like that. We actually are taking the financial statements, the 10K, which is the annual report, and the 10Q, and the proxy statement. And we are culling through those documents, and we've identified a series of what are called dependent and independent variables that have revealed a series or a pattern of behaviors that occur in companies like Enron that have failed. And we rate those companies on a scale of 0 to 1,000, similar to a personal credit rating, a FICO score. Uh-huh. And we rate them from, sort of low risk to high risk. Uh-huh. And next year we'll provide that on a high level for free to investors.
Well, let's show a couple of slides. The waste management slide, we'll put that up on there and talk a little bit about their particular performance with this integrity rating.
So using the mathematical model, if we had looked at waste management and had the integrity index been around at that point in time, we would have seen that while waste management stock price was going up, their integrity index score was dropping dramatically. And so you can see that point where the rating drops from the 700 down to 200, and yet the exuberance of investors and the stock price keeping the CEO in his position, and then suddenly it dropped off and the company was down.
Wow. And so let's go to the next slide and look at Rite Aid and see what they did. Here's another example.
Yeah, very similar to that. What's interesting about this is you'll see where the number dropped dramatically in 1997. It wasn't until 2 years later when the stock collapsed. So had I been an investor in Rite Aid, I would have gotten out in 1997. Now, I wouldn't have seen the upside potential of 1997 to 99, but it was 2 years predictive. It showed me that in 97 that company was committing securities fraud.
Let's take a look at Enron's. And okay, here's your company, and this is what their performance was.
Yeah. So this is sadly, you're right, my company. I believed in this company. I went to work with this company. I intended to retire with this company. I invested 100% of my 401k in this company. And what we see is in 1993, Enron had its first dip, and the California Public Employees Retirement System invested $250 million, having no idea that Enron was likely about to commit securities fraud. Then it bumped back up because of that deal, probably. But by 1997, Enron was definitely in securities fraud territory, and yet California Public Employees Retirement System pledged another $500 million of its citizens' pension without knowing that Enron was on the verge of collapse.
So based on the integrity index, you would have actually saved billions and billions of dollars of investors' dollars and employees' dollars investments if they had basically been able to look at the purview of what the integrity index showed.
So the co-founder of the Institute was the highest ranking woman at Enron, and she says that without a doubt this would have saved Enron because she would have been able to communicate to Ken.
That is really amazing. I am very excited about the Integrity Index. I'm very excited about what you have to say. Also, the game-changing nature of bringing this transparency to the world of investing. I want to thank you, Lynn. This has been really fascinating, and we'll have you back, I'm sure, to talk when the release of these ratings. And I'm Jake Moe, and you've been watching Public Exposure. I've been sitting in for Stan Embert this week, and he will be back next week. And once again, we want to thank Lynn for great advice tonight.